Gold prices in China have recently shown sharp ups and downs. This has drawn thousands of investors into the market today. On February 3rd, the gold bar counter at the Cabbage jewelry flagship store in Beijing's Shenzhen district was crowded. Long lines stretched outside the door. Many customers were elderly. It felt less like shopping and more like a rush, similar to people grabbing discounted vegetables. The scene had been very different just a day before. On February 2nd, long lines also formed outside the same store, but those people were not buying gold, they were selling it. A sharp drop in gold prices on January 30th triggered the first wave of panic selling.
The Cabbage jewelry store is buying back gold bars. Look at how many people are coming to sell their gold. This line is so long. How long will it take to get through it?
A user on Douyin who had worked nearly for 2 years said it was the first time he had seen such a long line. Everyone seemed to be trying to sell their gold. People joked in the comments, "Aren't these the same people who rushed to buy gold just a few days ago?" It's like the stock market. Buy high, sell low. The gold stores are making a fortune. But one Douyin user offered a different view. "We're mocking these elderly people, but have you considered that they may have made their money in real estate, stocks, or gold years ago? They caught the wave of economic growth." This frenzy for gold and silver is not limited to Beijing. From old gold shops in Shanghai to banks and jewelry stores in major cities, and to Shenzhen's Shuibei, the world's largest gold and jewelry trading center, crowds have gathered everywhere. Many gold counters are sold out. This wave of buying and selling stems from the gold market crash on January 30th, which investors have called Black Friday. On that day, gold prices dropped 12.9% at one point, the largest single-day fall since 1983. But by close, the price was down about 9.3%. Silver saw even sharper decline, falling 35.9% at one moment and setting a record for the biggest single-day drop in history. On February 2nd, the first trading day after the crash, many investors grew restless. Panic triggered a large sell-off, with long lines forming outside Cabbage jewelry. At the same time, the sharp price drop drew in other investors who viewed it as a chance to buy low. This created an unusual scene where selling and buying both surged at once. The roller coaster in gold prices, though it appeared sudden, came from several factors combining. First, the earlier steady rise set the stage for the fall. In recent years, geopolitical tensions and worries about a global economic slowdown renewed gold's status as a safe haven asset. Markets also widely expected major economies to cut interest rates, which made gold more appealing. As a result, large amounts of capital poured into gold, driving prices to high levels and forming a bubble. At that stage, even a small shift could tip the balance. On January 30th, U.S. President Donald Trump nominated Kevin Warsh, a former Federal Reserve governor known for his firm views on inflation, as a new Fed chairman. This news broke the market's hope for ongoing easy policy and sparked panic. Speculative money quickly pulled out of gold and silver, and some investors even took short positions, which deepened the crash. In this flow of capital, retail investors are often the last to react. While big institutions had already cut their holdings or shortened the market, many ordinary investors, still swept up by social media talk of quick riches in gold, bought near the peak. This is especially true for elderly buyers, who ended up as some of the final purchasers before the drop. Amid the chaos in the gold market, the situation in Shenzhen's Shuibei was even more extreme. Sharp price swings created stories of sudden wealth, but they also led to many personal tragedies. In recent days, at the entrance of Shuibei Market, people saw a woman singing loudly into her phone. At times, she became emotional and seemed to lose control. Some local commenters said, "She must have been triggered by something. I often hear her shout, 'Be cautious' when trading gold and silver." Others added, "She's on the edge after being scammed." Passers-by feel sympathy when they see someone desperate, betrayed, and robbed of their savings. We don't know if this woman was a victim of the Jiewo Rui platform, but at the center of the storm is Jiewo Rui, a massive financial scandal worth billions. Posts on social media show that its collapse involved 13.3 billion yuan, affected 11 provinces, and left over 150,000 investors facing huge losses. Since the crash on January 20th, many investors have gathered in Shenzhen's Shuibei to demand justice. In response to the unrest, Shenzhen's Luohu district issued an official statement on January 31st, announcing intervention. However, that outcome was disappointing. On February 3rd, a report that Jiewo Rui's legal representative, Zhang Ziteng, was forced to pay 36,000 yuan sparked widespread online mockery. One comment read, "A 13.3 billion yuan case and only enforcing 36,000 yuan? Isn't that a joke? What's the difference between this and no enforcement at all?" A lawyer named Wei, who personally visited various departments, shared the desperate situation of the victims in a video.
大家好，我是韦律师，现在我在罗湖体育馆附近。
Hello everyone, I'm lawyer Wei. Let me share the first-hand information I gathered from the scene. First, the Jiewo Rui office is now empty, with only the police there, directing people to the Luohu task force. Second, the police station is not accepting any reports, sending people to the Luohu task force. Third, the economic crime team is only registering losses, not handling the follow-up. And again, directing people to the Luohu task force. Fourth, while the Luohu court accepts filings, they don't handle the cases either, forwarding everything to the task force. Lastly, the so-called Luohu Sports Center Task Force office is staffed entirely by Jiewo Rui's own legal team. They are only doing one thing, confirming your principal amount and offering a 2/3 refund, provided you sign their settlement agreement. If you refuse, they have no other solution. One victim described Jiewo Rui's compensation plan with the phrase, Audi in, Yandi out. The agreement allows no room for objections. Another victim explained that if anyone questions the plan, the platform reduces the offer even further, leaving them with almost nothing, like being handed just a frame of a car. Another victim shared a video in which he said that after investing 80,000 yuan, the platform offered only 20,000 yuan as hush money, but only if he signed a non-disclosure agreement. If he refused, he would have to pay 100,000 yuan. A different person revealed that after investing 12,000 yuan, the negotiated compensation came to just 0.42 yuan, not 42,000 yuan, but 0.42 yuan. Behind these cold numbers and absurd compensation offers are countless families torn apart and individuals left in deep despair.
This is a message for Zhang Zhiteng from Jiewo Rui Jewelry. Hello, I'm Jia Wei. I lost 180,000 yuan. I didn't report it. I didn't register. I didn't even go to the scene. Now I want to cry, but I have no tears. I just feel a heavy, suffocating pain in my chest.
Today, I was truly disgusted by Jiewo Rui again. When the platform collapsed, we longtime users chose to trust it without hesitation because, in the video, they promised to pay us a low-income subsidy of 500 yuan regularly. But today, that promise was rejected. The custom products we purchased on the platform were all cancelled today. You might as well learn from the nearby Yundian. They also had a run on funds. You kept calling us family. But can you really look yourself in the mirror and ask, is this how you repay loyal customers? Jiewo Rui was able to deceive so many investors by first drawing them in with very attractive offers, then trapping them in a carefully designed scam. The platform began by advertising low fees and commissions. It then promised to buy back gold within 7 to 15 days at prices 3% to 5% higher than the daily market rate. This meant annualized returns that easily topped 200%. In a time when bank deposits offered almost zero interest, or even negative rates, such promises proved hard for ordinary investors to resist. Behind the scenes, the platform operated an unregulated fund pool betting model. Its core fixed price system allowed bets on precious metals price movements using up to 40 times leverage. They created a closed loop with 3 linked mini-programs that directed all funds into private accounts they controlled, completely avoiding oversight. New investors' money was used to pay returns to earlier users. This structure followed the classic pattern of a Ponzi scheme. As one lawyer explained, you were attracted by the low fees, but what they really wanted was your principal. Most importantly, the operators had prepared a legal shield well in advance. Just 2 months before the collapse, the legal representative, Zhang Zhiteng, changed the company from a sole proprietorship, which would have made him personally responsible for all debts, to a limited liability company. This change legally separated his personal assets from the company's huge obligations, limiting his liability to only 10 million yuan. Jiewo Rui is not an isolated case. Several gold dealers in Shuibei collapsed earlier due to similar fixed-price operations. Since last year, many companies have run online platforms that offer non-physical gold betting, a practice now suspected of breaking laws against operating gambling businesses. But Jiewo Rui stood out with its strong presence on social platforms and its focus on building personal brands. It promoted high-risk, high-leverage trades while presenting them as safe gold investments. This approach drew in many people who lacked solid financial knowledge or a clear sense of risk. The crisis at Jiewo Rui continues to grow. Thousands of victims still wait for compensation. Among their losses are retirement savings, life savings, business funds, and even marriage dowries. Behind each figure lies a family's deep pain and collapse. The recent gold buying rush and scams like Jiewo Rui reveal a harsh truth. Ordinary people in China now face an unprecedented investment crisis. On one side, traditional low-risk options have nearly vanished. Bank deposit rates keep dropping, and some term deposit rates no longer match inflation. This has created a period of real negative interest rates. People see their savings lose value simply by sitting in the bank. On the other side, the capital market, once viewed as a reliable path to wealth, has disappointed. The A-shares market has lingered around 3,000 points with wide swings. Long downturns mixed with short rallies have caused heavy losses for many retail investors. At the same time, real estate, long the main source of wealth for Chinese families, has entered a lasting period of adjustment after its boom years ended. In this environment, many ordinary Chinese people, especially elderly individuals who have saved all their lives, feel growing anxiety. They urgently search for ways to preserve and increase their wealth. Gold and silver, as physical assets, naturally attract those who want security. Yet when speculative money pours in, it sets the stage for scams. Now, reports of fake gold and silver are increasing, leaving ordinary investors even more exposed. On February 3rd, counterfeit investment silver bars were found at Shuai Market. A market regulator cut one open and showed that it contained only iron inside. It's made of iron, see? Inside, it's all iron, black iron. It's all dark gray iron inside.
Let me show you this. This is a silver bowl a customer bought from a certain Fengxiang jewelry store 10 years ago. At that time, it was sold based on total weight, right? Yes, total weight. How much was the set? Over 1,200 yuan 10 years ago, and it weighed like this. The customer thought this was all silver, but when they came in today wanting to turn it into bracelets, they said the total weight was over 200 grams. They wanted to make 2 bracelets with 100 beads each. During the melting process, the bowl cracked open, revealing only a thin layer of silver. Half of the ladle wasn't silver either, and the chopsticks, the upper half is copper. This set of silver dinnerware bought 10 years ago in a jewelry store, now that silver prices have risen so much, hasn't even broken even for her yet. This just shows the tricks behind it.
Recently, a Shanghai-based investor reported that silver bars bought from China Construction Bank turned out to be fake. This raised a serious concern. If even a major bank can sell counterfeit items, where can people still trust to buy genuine products? Even more worrying, this is not a one-time event. A woman purchased 4 gold bars from a bank. She planned to sell them at a jewelry store when gold prices increased. When she tried, she learned they were fake.
Did you hear? The bank has another problem. I can't believe this happened in one of the big 6 banks. Would you check if a gold bar is real when you go to a bank to buy one? Well, someone actually did check. After testing, they cut it open and found it was filled with copper. The customer had to go straight to the bank. The bank's solution was simple. They just refunded the money. But after checking, they found that all the gold bars in that batch had been swapped. First, deposits vanish, and now people can't trust the gold bars either. So, is this a people problem or a system problem?
While the switching incident at the bank may stem from internal management problems, purity issues at well-known jewelry brands appear more widespread and harder to spot. Recently, Ms. Li from Qingyuan, Guangdong, faced a similar issue. She bought a Chao Sang Sang pure gold lucky bag pendant on January 5th. After wearing it for only one day, it showed scratches and white marks. Concerned about the gold content, she had the pendant tested. The results raised serious alarms. The highest purity recorded was 99.99%, but other areas measured much lower. One spot as low as 64.4%. The gap between the highest and lowest readings reached 35.6%. Tests also detected other metals in the pendant, including iron, silver, and palladium. The store is part of a major national chain. When even well-established retailers sell products with such clear purity problems, consumers are left asking who remains trustworthy. With scams and counterfeit items so common, many people wonder why fraud has become so widespread in China today. The main reason lies in widespread regulatory failure. In the financial sector, oversight has largely collapsed. Jiewo Rui, originally a jewelry retailer without any financial license, ran high-leverage, quasi-futures trading and handled billions of yuan. For years, investor funds moved into private accounts, far outside regulatory reach. Even though some investors knew financial rules, the platform continued without interference. Authorities acted only after the collapse, and their response was slow and ineffective. Much like past P2P platform failures, the process dragged on unreasonably, leaving investors to bear the heavy losses. Product quality regulation faces similar problems. Counterfeit goods now appear even in trusted places such as banks and large jewelry chains. This shows major weaknesses in enforcement. When profits from fake products far exceed the penalties, and when consumers face high costs to protect their rights, market disorder becomes almost unavoidable. In this setting, where dishonest practices prevail and fraud spreads freely, honest effort and careful investment feels almost pointless. When a society cannot safeguard its people's financial security, and when scammers take advantage of system gaps with little fear of punishment, many feel forced to chase risky schemes or walk straight into well-laid traps.